Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Optimism continues with stocks rallying as bets grow for an interest rate cut by the Fed next month. Oil in flux as traders weigh the prospect of a Ukraine-Russia peace deal. But Secretary of State Marco Rubio says President Trump's Thursday deadline for Kyiv to back his plan is not set in stone. And Israel kills Hezbollah's second in command in a daylight strike on Beirut. Well, it's just gone at 9 a.m. across the Emirates. I'm Johanna Versace in Dubai. The markets are starting off with a spring in their step this week, so a bit of a turnaround from some of the sentiment, the negative risk-off sentiment that we had towards the end of the week last week. A better close for Wall Street on Friday, however. This time, the optimism is centered around two things. Number one, some comments from the Fed's Williams suggesting that a rate cut could still be on the table for December. So that was good news, I guess, for investors. And the second thing is it seems as though U.S. officials have been discussing the possibility of allowing Nvidia to export the H200 chip to China. So both of those things set in motion a risk-on session this morning. S&P futures up 0.4%. European markets also looking to open up in the green, up 0.7%. A big week this week in Europe. We've got the UK budget coming up on Wednesday. And of course, the backdrop to all of this, geopolitical discussions with the US really putting a lot of pressure on Ukraine now to accept that 28-point proposal for the Russia peace plan. So we'll talk more about that on the show. Gold slipping a little bit today in trading, down 0.5%. It's third day in a row of declines. And then Brent also getting closer and closer to that $60 mark. 62.50 is where we're at today, trading sideways. But I should just say that last week it posted its biggest weekly loss since early October. And again, one of the factors contributing there is that Russia-Ukraine peace deal and what it could mean for Russian production coming online. Switching over our terminal chart today, given it's Thanksgiving week in the U.S., so we're getting into holiday season, I thought it would be good to take a look at how the U.S. consumer picture is actually faring. So the white line is the ETF that tracks consumer discretionary. It's actually done okay this year. But then this was flagged by our colleague Anthony Stevens in Hong Kong. Really interesting to note that what came out of the University of Michigan is people are very concerned about unemployment, and you can see that their feelings about being employed in the job market are actually pretty subdued at this point in time, which tells you that there is actually a lot of concern about the way this job market is evolving in the U.S. And even consumer sentiment is also sitting at a low, the lowest level since 2020. So some negative sentiments coming through from the consumers. Let's see how this all pans out this week. We obviously have retail sales numbers to watch out for too in the U.S. Okay, let's zoom in on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio. Min Min, give us a sense of how these markets are responding to the more upbeat tone that's coming through from U.S. futures.
That's right, Jomana. We had the bulls coming out to take charge once again this morning after the very volatile week last week. And as you said, there are a couple of factors at play. The repricing of the Fed rate cut in December now back on the table. And then there is the scoop about how the U.S. is considering the sale of these H200 chips to China. So that's providing a tailwind for stocks. We're checking Nikkei futures because Japan markets are shut for the holiday, but already now you can see the Kospi paring back earlier gains, and it shows you that the risk sentiment is looking a little bit fragile here. But you flip the board and take a look at some of the chip stocks again because of that scoop about the H200 chips. And yes, we can see SK Hynix and Samsung looking still in the green, giving up some of the earlier gains, but still in the green. But TSMC looking unchanged at the moment. But what's different, though, is the Chinese stocks. They are reacting quite differently here. We are seeing steep declines, down about 10% for Hua Hong Semi, 5.7% lower for SMSIC, because the H200 chip sale, while it is good for the AI sector in China, at the same time, it's bad for that domestic substitution theme, right? So some of these local domestic chip makers not doing so well today. Jumana.
Min Min, thank you so much. That was Min Min Lo in Hong Kong. Well, as Min Min was just describing, stocks have been gaining in Asia today, extending the optimistic end to the week seen in U.S. markets. Investors seeing an increased chance of a near-term rate cut from the Fed.
I view monetary policy as being modestly restrictive, although somewhat less so than before our recent actions. Therefore, I still see room for a further adjustment in the near term to the target range for the federal funds rate to move the stance of policy closer to the range of neutral, thereby maintaining the balance between the achievement of our two goals.
Garfield Reynolds, who leads our MLive Asia coverage, joins us now from Sydney. Garfield, it's pretty amazing to see how one comment from a Fed policymaker can move the market so much. I guess now we're back in the camp of maybe a rate cut is still on the table for December?
Yeah, I think so. I mean, it's also, to me, it was a little bit weird that the market had moved so decisively to price a low chance of a rate cut, because amid all the uncertainty, it was clear that there were concerns about the labour market, and the slide in equities and other assets was starting to send the sort of signals that traditionally the Fed has responded to. So amidst all of those doubts, it was, I always felt like a coin toss was the minimum you should be betting on. Now, with Williams, and he's an important member of the FOMC, rightly or wrongly, many regard him as being quite close to Jerome Powell, and therefore what he said, in the absence of any comments recently from Jerome Powell, was taken as signaling this is how Powell is thinking. And while the Fed is clearly pretty divided at the moment, you would think if Powell and Williams were to come down and say, yes, we should cut rates, that's going to be enough to get a rate cut over the line. So that helps to explain why there's such a strong move in response to this. I think it's also because the mood had become so grim, it was getting a little bit overstretched to the downside. Buy the dip has been such a rewarding strategy for so long that this then provided a concrete reason for people who wanted to buy the dip to come in and buy the dip.
Yeah, and we're heading into quite a big week as far as the consumer is concerned in the U.S. We've got retail sales, Thanksgiving week coming up, always a good test for consumer spending and how things are evolving there. How much of a catalyst do you think that could be for this continued momentum in U.S. stocks?
Yeah, I see that as the other potential catalyst that we've got coming through. Most of the time, the Thanksgiving period, Black Friday sales, which these days seem to start about November 1 and go through to about December 10. But be that as it may, this is when it really gets on everybody's radar. Usually they somehow manage to beat expectations on it. It gets people excited about consumer resilience, about consumer spending. So there's a decent chance that we get some data that helps to further revive sentiment. We'll also get some actual data from the government on retail spending, although that's, I think, from back in September, that's a bit dated. All the same, we're going to get more of a picture on what's going on with the consumer, how well, therefore, the US economy is holding up. And it's a potential win-win for stocks, because if it shows that the consumer remains resilient, well, that's good for stocks. If it shows the consumer is falling out of bed, I would expect those rate cut bets to jump to about 100%. That might well be a bad news is good news for stocks moment. The sting in the tail would be if the news is really bad, so bad that even a single rate cut in December, shockingly, would not be enough to turn things around.
Yeah, thanks for breaking it down for us. Garfield Reynolds, really good to have you with us on the show today. Well, coming up, BHP has ended another last-ditch effort to buy Anglo American and bolster its dominance in copper. We'll bring you the latest on the on-off mining sector saga. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. BHP has walked away from a fresh takeover bid for Anglo American. It brings an abrupt end to a short-lived attempt by the world's biggest miner to thwart a planned tie-up between its smaller rival and Canada's Teck Resources. For more, let's go to Bloomberg Metals and mining reporter Paul-Alain Hunt in Melbourne. Paul-Alain, it's really good to have you with us. Well, it's been quite a year vis-a-vis, this potential consolidation. Was it on, was it not on? Why did BHP come back for Anglo American over the course of this weekend?
Well, that's just it. You know, a year and a half ago, there was a $49 billion bid on the table. BHP walked away from that, and then this weekend, just last night, we broke the news that they had returned. And then pretty much as soon as we'd announced it, you know, less than 24 hours later, BHP announced that they confirmed our reports, and then they said that they'd walked away. One of what is at the heart of this is copper, right? The red metal used in electrification. With the rise of data centres and, of course, the energy transition, copper has never been more important. BHP sees an outlook where copper demand soars 70% up to 2050. So really that was behind it. BHP chases big assets, so it wanted assets that had long lives to them, low operating costs, and a lot of value and synergies to them. And to them, Anglo American has all of that. So it returned, as far as we know, this week, but it's leaving that now, and now we just don't really know what happens next for BHP, because copper growth is one of the three core pillars to this business going forward. That and, of course, potash.
Yeah. Yeah. Okay. So it seems as though they've walked away again, BHP. What were the challenges around this deal actually going through? Is it just a matter of economics, or was it something else?
So if we look at the deal that they floated last year, they were pushing Anglo American to divest many of its businesses that BHP didn't consider attractive at all. So there's like De Beers, the famous diamond market, the famous diamond business of Anglo Americans. But BHP didn't want that because the diamond market isn't where it wants to be. It also wanted to get rid of other assets, including the platinum business and the nickel business. Now, Anglo American, since that last takeover attempt, has divested many of these businesses, spinning them off. And for that, shareholders have really rewarded Anglo American. So they're trading up a lot higher. And that was a challenge for BHP now, because when it approached last year, Anglo's share price had been dwindling somewhere down the bottom, and now suddenly it's a lot more of an expensive stock. But other challenges still remain. So antitrust, for instance, you know, BHP would have had to have gone through regulators in South Africa, and that was seen as a huge hurdle for it to jump. And that's not even touching on, you know, China antitrust and other issues too.
Yeah, so interesting. Paul Alain Hunt, Bloomberg Metals and mining reporter. Let's see what happens with this story as time evolves. Thank you. Well, the U.S. Secretary of State has suggested President Trump's Thursday deadline to secure Ukraine support for a U.S. peace plan could drift into the following week. Marco Rubio's note of caution followed talks between the U.S., Ukraine, and Russia in Geneva that both sides described as making progress towards a deal. Bloomberg's Palash Pence is in Hong Kong. But, well, Palash, it's been a weekend of intense diplomacy. We know that the U.S. are applying a lot of pressure on Ukraine to accept this 28-point peace plan. Are we getting any closer to Ukraine accepting?
Well, it's difficult to say, Joanna, but the fact that Marco Rubio suggested that the deadline may move around a little bit and it won't be that hard and fast, November 27th deadline that the president has set, suggests that they are working towards a solution, that they are making progress. And while the communication from the Ukrainian side might not have been exactly what the White House would have expected, they also suggested that they made some progress, which tells us that they probably were able to get some of those very crucial issues for Ukraine across and have been able to get the American side to move a little bit. So they are working together on a new framework, working together on a new proposal, and they are moving it in a direction that's more acceptable to Ukraine and the Europeans after that 28-point plan that came out from the U.S. recently, which caused quite a bit of alarm both on the European side and the Ukrainian side, because as our reporting shows, that was the result of intense negotiations between the U.S. and Russia, with all the other actors being in the dark a little bit over them. So what we know about what happened in Geneva is that there's been some progress towards a more common proposal.
Yeah. And what do we know about those counter-proposals coming through from Europe and Ukraine? What specifically are they pushing back on, Balazs?
There are a few things that are clear about that, Joanna. One thing that they propose is this NATO-like shield for Ukraine after there is a final ceasefire or a final peace agreement to deter Russia from any further aggression. Some of the other things where the Europeans and Ukraine together pushed back on was this idea of Ukraine ceding some territory that Russia has never been able to conquer during this war. This is something that would be unacceptable for the Ukrainian side, or at least has been unacceptable until now. There are a few other things that they are negotiating that have to do with some of their operations, some of the Russian assets that are frozen right now. But those are the main issues: the security guarantees and the issue of land.
Balazs, thank you so much for breaking it down for us. Balazs Pence. Now, Finnish President Alexander Stubb says he's talked with President Trump and Italian leader Giorgia Meloni about the U.S. peace plan for Russia's war in Ukraine. He spoke to Bloomberg's Jennifer Zabazaja on the sidelines of the G20 Leaders Summit in Johannesburg.
I think the plan has 3 levels. Number one is Ukraine. What happens to Ukraine? Land swaps, etc. Then level number 2 is Europe and European security, EU and NATO. And then level number 3 is the transatlantic partnership. So with these things, it takes time. That's why we have our national security advisors in Geneva today, speaking with Foreign Secretary Rubio, with Andrei Yermak and others. So, one day at a time.
Is there anything specific, though, you would like to address first?
No, I think, we work on this as a team. So that's why we had 11 countries from the Coalition of the Willing meeting here in Johannesburg yesterday, including Canada and Japan, who are strongly committed in finding a just and lasting peace in Ukraine. And we work on the text together, we negotiate together. And I don't want to lift up any specifics at this stage.
Do you believe this, though, was Europe being sidelined to a certain extent?
Well, I guess yes and no is the right answer. Yes, in the sense that we hadn't seen the document beforehand, but no, in the sense that now we're negotiating and discussing with our American friends and allies. So I'm not too concerned. I think quite often in these types of negotiations, you need patience. You need to be cool. You need to tone down the emotions, and I guess to a certain extent be a little bit more Finnish, and then you find a solution. You'll find the finishing line.
But you seem certain that this will not be the final agreement. Why are you so certain about that?
Well, we're here in the G20, right? And here a document was approved. The establishment of that document took months. So it's never the first draft that goes through. You have to do many different iterations. I think it doesn't matter whether you're a lawyer or whether you're in the news business. When you deal with contracts, it takes time.
Does that mean potential discussions with President Trump? You're known to speak to him often. Have you spoken to him this weekend?
Well, now that you ask, 10 minutes ago, Prime Minister Meloni and myself spoke with President Trump.
And what was the progress of those discussions? It's quite early in the U.S.
The President of the United States wakes up very early and he works very hard. And he wanted to talk about the plan and the state of play.
Are there more discussions planned this week? You mentioned Rubio is in Europe right now.
Yeah, I think right now we hand it over to our national security advisors in Geneva and Rubio and the Ukrainian team, and we see what comes out by the end of this evening.
Okay, so it's unlikely then that this Thursday supposed deadline will see a final agreement.
Well, it's difficult. I don't want to sort of preempt that. You never know with these kinds of negotiations. But I think the key right now would be to get a ceasefire.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Israel says it has killed Hezbollah's military chief, Abu Ali al-Tabtabai, in a rare airstrike on Beirut. Lebanon's health ministry says the strike left 5 people dead and 28 others injured. For more, we're joined by Bloomberg's Dan Williams in Jerusalem. Well, Dan, this is Israel's first attack on Beirut since June. obviously looking to target a senior Hezbollah official, but no warning was given this time around, which explains the number of other casualties, civilian casualties involved in the attack too. Could we read this as the beginning of a real intensification of Israel's war efforts in Lebanon?
I think so, yes. There was no explicit warning, but there was certainly the drum roll of increasing, spiraling, almost daily Israeli missile strikes against Hezbollah members, against alleged arm caches, weapons buildup, specifically and mostly in southern Lebanon. But as you noted, also in the capital now, there have been occasional attacks in the Bekaa Valley. Now, Jaman, it's been around a week since your exclusive interview with the Lebanese Prime Minister. He offered reassurances about Beirut's plan to disarm Hezbollah by the end of the year, at least in southern Lebanon, really the ground zero, the former fiefdom of Hezbollah before this 2-year war in the region. However, the Israelis don't appear convinced by the pace and the seriousness of the Lebanese government's planning and actions, nor do the United States, given what we had from a U.S. envoy just a couple weeks ago warning, in his words, that Beirut was in the thrall of a terrorist group and that there could be a major confrontation in the works with Israel. So there is a ticking clock here. The Israelis seem very serious about preventing Hezbollah from building up the ability to menace Israel again across its northern border. This is part of Israel's overall post-October 7th strategy of establishing strategic depth, of not letting enemies build up the means to threaten it. Now, the question is whether this ceasefire in Lebanon, which is almost a year old, the 1-year mark is 3 days away, can hold. It's clearly a porous ceasefire. It's a ceasefire between Israel and Lebanon. Hezbollah is the elephant in the room in that ceasefire deal. However, Israel has been carrying out these actions, citing a provision in the deal that allows it to take action in its self-defense. By the way, the Lebanese government also has that entitlement. For now, no one is calling off the ceasefire, but this assassination strike really is a new high, a new precedent being set. The big question is whether Hezbollah will respond, if it has the means to respond and retaliate, given the drubbing it took in the war, or whether it will hold its peace for now.
Well, you mentioned my interview with the Lebanese Prime Minister, his comments of the weekend, very vocal, saying that all of the country needs to rally behind the state, the sovereign, i.e. perhaps indirectly saying that Hezbollah should not react or take things into their own hands. Dan Williams, thank you so much. Well, coming up, undiplomatic language at the G20 summit, but members reach agreement on critical minerals and trade. Details next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Optimism continues with stocks rallying as bets grow for an interest rate cut by the Fed next month. Oil in flux as traders weigh the prospect of a Ukraine-Russia peace deal, but Secretary of State Marco Rubio says President Trump's Thursday deadline for Kyiv to back his plan is not set in stone. Plus, the G20 summit manages to agree to a declaration despite a U.S. boycott, threats and false claims by Donald Trump. We are live in Johannesburg with the details. Well, it's just gone 9:30 a.m. across the Emirates. I'm Joanna Versace in Dubai, and there's green on the screen today, so a bit of a turnaround in sentiment from where we were perhaps this time on Friday. By the close, though, Wall Street did post a solid day of gains. Today, you can see things are looking upbeat as well. S&P futures up 0.6%, European markets up about 0.8%. Some comments from the Fed's John Williams suggesting that a rate cut may still be on the table for December has been met positively by investors. Also, a scoop on Friday that U.S. officials are thinking about granting Nvidia the right to sell H200 chips to China has also been met positively by the tech space. So this is the reason we're trading in more positive territory this morning. Holiday week coming up, remember that. And today is also a holiday in Japan, too. So we're going to keep an eye out for how the consumer spending numbers evolve throughout the course of this week. Gold also down 0.5%. You can see third day of declines for gold. And then Brent 62.5, basically trading flat, but has been under a lot of pressure. We saw its biggest weekly loss since October last week. And this, as we continue to keep an eye on the geopolitics and perhaps a potential breakthrough when it comes to Russia and Ukraine peace talks. Switching over, I did mention the U.S. consumer. Just to put things in perspective, we have an ETF that tracks consumer discretionary stocks. It's been doing okay. It's come off a bit in the last couple of days, but essentially it has been quite a good ride so far for consumer discretion if you look at the performance since April. Not the case, though, when it comes to consumer sentiment. And you can see the blue line below tells you that people are feeling a bit worried about their job prospects. So their unemployment expectations are at multi-year lows. Similar thing for sentiment. So something to bear in mind as we head into a crucial couple of weeks for the consumer in the U.S. All right, let's zoom in on how markets in Asia are faring as well. Min Lo is in our Hong Kong studio. Min.
Hey, Jemana, yes. Looks like markets is stabilizing right now after a very volatile week last week, right? And as you said, with the latest Fed speak, investors are revising their bets of that December rate cut. And you add to that the Bloomberg scoop suggesting that the U.S. is internally debating whether or not to sell those H200 chips to China. So these are all tailwinds for stocks in the region. You can see we're checking the Nikkei futures trading in Singapore because Japan is closed for a holiday. The Kospi is now back in the green. It has been flitting between, red and green. So perhaps that recovery sentiment still a little bit fragile this morning, but definitely the chip stocks, of course, are going to be a beneficiary if the U.S. does loosen tech restrictions on China. And here you can see it's a tale of two stories. You have the Korean chip stocks like SK Hynix, Samsung seeing sizable gains here, but big declines on the likes of Hua Hong Semi, 6.5% lower, SMIC as well, down 3.3% or so. And that's because it's bad for the domestic substitution theme in China. What else we're watching is Alibaba stock as well, jumping today up by 5.5% after the company announced that it launched its Q1 AI model, the app last week, and saw more than 10 million downloads. Very positive for sentiment. It's spilling over to all the other AI names here. You can see Baidu, the likes of Kuaishou up by 6.6%. And it's helping to lift the Hang Seng Tech as well. And just last week, we were watching for correction and for bear market territory, but now we are 2.7% higher.
Min, thank you so much. Min Lo in Hong Kong. Well, South African President Cyril Ramaphosa struck a final agreement with G20 countries at the summit, despite American threats and false claims of white genocide by Donald Trump. The meeting brought together nations representing a significant portion of the world's population, with Canadian Prime Minister Mark Carney saying the world will move on without the U.S. Bloomberg's chief Africa correspondent Jennifer Zabazaja is in Johannesburg. Well, I guess the question is, was the summit being perceived to be a success with the absence of many of those world leaders, including, of course, President Trump?
Right, Jemana, if you take a look at what South African President Cyril Ramaphosa had set out for when he took over the G20 presidency, many people are describing it as a diplomatic success. Many of the priorities that he had initiated with his G20 presidency actually did make it into that final declaration. And just on that final declaration, that was seen as quite a surprise because it was achieved early on in the summit on the first day as opposed to the last day. And that coming despite some of the threats from the U.S. president and the U.S. About issuing a declaration considering they weren't actually president. We also saw a number of leaders, as you can see on the screen right now, many of them congratulating the South African president for his presidency, for being able to still convene the summit. And as one put it, I think it was Kristalina Georgieva saying that it wasn't an easy feat, especially if you consider what the past year has looked like. But still, much of this summit really also really portrays some of the rifts that still exist and the tensions geopolitically, and perhaps some of the threats that still multilateralism faces. In particular, a number of the achievements around the issue of debt sustainability and climate disaster relief were achieved because of some of the smaller groupings that were put together. We saw many of the Europeans needing to gather around on the Ukraine issue and the 28-point plan that the U.S. put out. And also this issue of debt relief, we saw a number of BRICS leaders that had met on their own. And so the real question is, what does consensus and unity still look like within this G20 camp? And what is it going to look like now that the U.S. has taken over the presidency for 2026?
Yeah, one other thing that caught my eye, Jen, is at last year's G20 summit in Brazil, there was only one reference to critical minerals. This year's document has a 4-point section on the subject. Why were critical minerals such a big theme this year?
It was really a defining theme, Jumana, as you put it there. And if you take a look at some of the countries that were present and the leaders that were present in the past few weeks and even months, you can understand why. At least from the European perspective, there, of course, has been supply chain issues around critical minerals. And from a number of developing economies, many of them in the global south and here on the African continent, there has been an increased focus on this idea of beneficiation and not just exporting raw minerals or materials. And so, yes, as you were mentioning, this document did outline some of these measures and actually tried to put in place some efforts, at least by many of these nations, to protect the critical mineral trade from protectionist measures, unilateral decisions, a veiled swipe to a certain extent at China, but then also be able to withstand geopolitical crises, of course, trade disruptions, as we've seen over the past year or so, pandemics and natural disasters. And we also did see China being able to at least launch a green minerals plan with a number of global south countries. And so, yes, it became a key theme. The question is, again, what does implementation look like? Because text does not mean it is not binding.
Yeah, no, I guess another way to say that is actions speak louder than words. Our chief Africa correspondent, Jennifer Zabazaja in Johannesburg. Thank you so much for the brilliant reporting over the course of the last week, Jen. Well, we're now joined by Thea Jamison, Managing Director at Change Global. Jennifer was just walking us through some of the takeaways from the G20 summit, but also the fact that despite all of the challenges and the verbal attacks that President Ramaphosa was getting from President Trump, the G20 is being deemed to be a success. And it also has put South Africa on the global map. You could say that there are actually a lot of macro tailwinds going in South Africa's favor right now with their most recent ratings upgrades coming through for the economy.
That's absolutely correct. We're very, very excited about the economy as well as the capital markets in South Africa. I'm actually headed to South Africa this weekend for a whole week. And that is because under the new government, we have seen a really welcoming tone for private investment in the country. Business sentiment is up. And the S&P upgrade that you just mentioned is the first one in 20 years. So there is a real change. And the stock market is very, very attractive.
Yeah, we spoke about the Johannesburg Stock Exchange about a year ago now, and certainly there seems to be more activity going on there. Let me ask you perhaps a broader question about some of the other countries that you cover in your remit, vis-a-vis specifically opening up to capital markets and the measures that are being taken to attract international investors like yourself.
I mean, it's incredible. The change is just uniform across the board. We're seeing a real intent to open up the capital markets and to actually move the stock prices up. Whether it's here in the region, the DFM was in New York last week with Jeffries for 2 days, promoting all the positive change here in the UAE with the top corporates. And the number of IPOs and continuously pushing forward with growing the stock exchange. I was in Saudi Arabia yesterday, similar story. In Europe, we're seeing a tremendous structural change under the Draghi plan. There's a real push to move liquidity from bank deposits to the stock markets.
Absolutely.
So excitement all around on that front.
Yeah, let me just ask you, because you were in Saudi Arabia over the course of the weekend, a couple of questions there. One on specifically Tadawul. Bloomberg had been reporting that they were looking to raise some of the foreign ownership limits. The timeline has been pushed back a little bit, but would that be welcome in your view as a foreign investor looking to get involved in that space?
Absolutely. I mean, certainly to the extent that we're removing hurdles for investment, improving accessibility, that is definitely a positive. And yes, the time frame may be delayed, but it's happening. It's one directional. And what I sensed on the ground, and I've been traveling there for the past 8 years, there's a real sense of urgency to bring foreign investment and to put Saudi on the map for its internal investment opportunities.
What are the biggest investment opportunities you see in the kingdom right now?
So we're very excited about Saudi National Bank. And that's because the majority of the business is banking financials, so it's a proxy to the economy. But a part of the business is also exposed to the capital markets, and they're the number 2 player in terms of asset management and brokerage. And so when you look at their recent numbers, revenues or profitability was up close to 20%. And that to us indicates us that there's a lot of resilience in the economy. And from this valuation levels, which are quite attractive, we could foresee good returns going forward.
Yeah, the other big development the last couple of months is the fact that the UAE and the kingdom that we're waiting to get full details have been able to get access to some of the high-end chips that they need to power and bolster the AI ambitions. How does that accelerate the timeline of what these 2 major Gulf countries are looking to achieve?
I mean, this is just such a powerful and meaningful development, and it's so undercovered in the Western press.
Yes.
I'm going to be visiting with G42 this Wednesday, so I'm super excited to hear the story firsthand. But what's taking place in Abu Dhabi is very meaningful for the UAE economy. I think the IMF has predicted that AI will provide a massive boost to the economy, at something like 35% to activity over the next few years. So that is definitely a theme that we're excited about.
What is the best way to play that theme?
So at this time, there are very few opportunities, although there are more newer companies that will be coming to market, both here in Abu Dhabi, Dubai, as well as Saudi. But the one opportunity that is currently there is Presight, is the largest data analytics company.
Yeah.
They're doing quite well. Their latest revenue numbers were up 49%. And it's really a direct play on the AI development in the region.
Yeah, a company that we interview on our show quite regularly. Thea, thank you so much. Really good to chat to you. Thea Jamison, Managing Director at Change Global. Well, coming up, Dubai's property boom is fueling a debt frenzy. We'll have the story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Property developers in the UAE are raising billions through a growing arsenal of funding tools, from Islamic bonds to private credit. This comes as they ride one of the country's longest real estate booms in years. For more, we're now joined by Laura Gardner-Cuesta. Laura, I was reading in the article that you put out this morning, data compiled by Bloomberg shows that dollar bond and sukuk issuance alone has grown more than 12-fold from UAE property developers to $6 billion since 2021. Why is there being such a huge surge?
So, like you said, they're tapping into a growing arsenal of tools, especially in the credit markets. One of the things they're doing with all these dollar bonds is buy land. So there's an increasing race to secure prime locations in the UAE. As we know, property prices have been rallying since 2019. They're up 70%. And so they're really racing to buy this land and raise as much debt as...
Yeah. Could it create some problems down the track? I mean, they're probably building a wall of maturities now across the curve.
Yeah, so everyone that we spoke to about this topic seems pretty confident that there's no issues. They say, the fundamentals are strong, leverage is still low for many of these developers. Their profit margins are really high. Like, some of these guys have like 40% plus profit margins. Cash collections are high. But you are right, there is a wall of maturity that is building from some unknown names as well, because we've seen a lot of debut issuers tap markets for the first time. And there's a wall of maturities that is building in years where we just simply don't know.
But at the same time, it also taps into different types of investors, right? The typical investor who would buy a sukuk isn't necessarily the same investor that would buy your traditional bond.
Exactly.
Yeah.
So a lot of this issuance has been sukuk, and there are tapping private credit markets. So the investor base is growing. Some of them are also looking at IPOs. Bengati, Aradas are one of the names. So they're really trying to maximize as much as...
Yeah, how concerned are investors around the sustainability of this boom? I think you mentioned, house prices are up, property prices up 70%
yes,
of the
since
course
2019.
Since 2019. Is there worry that these types of levels of growth are no longer sustainable?
I think, I mean, there have been reports this year saying, there'll be like an oversupply hitting in the next few years. The people that we spoke to at least say that often this gets delayed. So the numbers that you're expecting, like there's delays. Developers can also drip feed and delay the supply themselves. So they've been through this before. They understand the market. So I think right now there isn't a concern. I mean, what might happen is that the pricing of this sukuk gets a bit more expensive, or there's a bit of like fatigue. One of the analysts told us that like you've got like so many names from the same sector tapping markets, but so far no one seems too concerned.
Laura, thank you so much. That was Mideast Money reporter Laura Gardner-Cuesta. Now, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Now for a look at some of the other stories we're following today. The European Union is pledging €7 billion to boost renewable energy generation and expand electricity access in Africa. The funding is part of the EU's Scaling Up Renewables in Africa campaign, now totaling more than €15 billion in commitments. European Commission President Ursula von der Leyen said the initiative will help millions gain power and make the EU, quote, Africa's partner of choice. The United Arab Emirates is pledging $1 billion to expand artificial intelligence infrastructure and services across Africa. At the G20 summit in Johannesburg, UAE Minister Saeed bin Mubarak al-Hajiri said the investment will strengthen digital infrastructure, government services, and productivity, ensuring no country is left behind in the AI age. And coming up, Bloomberg learns U.S. officials have held early talks on whether to let Nvidia sell its H200 AI chips to China. That story is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Well, Bloomberg has learned U.S. officials are having early discussions on whether to let Nvidia sell its H200 AI chips to China. It's a move that would mark a major win for the world's most valuable company. For more, Bloomberg's Asia tech correspondent Animal Juters joins us from Hong Kong. Well, this is having a big impact on market sentiment today. But, Belle, at the same time, there's still the geopolitics to contend with as well. So is this as big a win for Nvidia as the markets seem to think it is?
I mean, it's very hard to say. I think one of the big questions is even if you could have H200 shipments to China, would China necessarily want them? Because H20 curbs have been lifted, but still we don't actually see any purchases coming. So I think that's sort of at the crux of this going to be one of the big issues. But just to sort of step back and give some context, because as I said, we're talking about the H200 versus the H20. So the H20 is both in the Hopper series, but the H20 is the one that was modified specifically for the mainland market. The H200 is a much more powerful chip. It's got more compute power, higher bandwidth. It's just generally a more advanced chip. So these are from the Hopper series, as I said. It's actually the Blackwell series that's on sale right now in the US, and they're scaling up to Rubin architecture. So you're still a couple of, I guess, iterations behind. But yes, that's what we're hearing from sources, is that the Trump administration is looking at these chips being allowed to be sold. Exactly what it means for Nvidia. You did see that sort of rally off the back with the stock trended higher into the close. You're seeing some relief today in Asian tech stocks. But at the same time, yes, concession for China. At the end of the day, does China still continue to focus on that self-reliancy?
Yeah. Well, you also spoke to the Honhai chairman, Young Liu. What did he tell you about their multi-billion-dollar AI push?
Yeah, this was a really great interview that we had on Friday, actually. But just to, again, set the scene here, there's a new accord that's been signed. So Foxconn is actually very, very intimately involved in the infrastructure rollout in the US because they're the biggest supplier of AI servers to Oracle. It's Oracle, OpenAI, and SoftBank that are working on Project Stargate together. So this is already a company with a lot of exposure in this space. But it's the first time we've seen Foxconn and OpenAI sign this accord or MOU together. It's difficult to know exactly the size of it because there's no specific financing agreements in place, there's no specific purchasing agreements in place, but still there's a lot of potential, and that's very much reflected in the amount of money that Honhai is prepared to put into this initiative, because I spoke to Young Liu and asked him about the CapEx plans, but take a listen.
CapEx-wise, it's in maybe 1 to 5 billion to start with, 1 to 5 billion to start with, to build the factories, to build R&D centers, okay, but to build the working capital required to build a data center, that's totally different. That requires huge amount of money.
Yeah.
And with that, we are going to work with SoftBank.
So a very ambitious plan that they've got, OpenAI and Foxconn. And remember, of course, Foxconn wants all of these products to be made in America. So that underscores the huge amount of capital that they're actually looking to invest.
Asia Tech correspondent Annabelle Jewelers in Hong Kong, thank you for bringing us the latest on both of those very important companies in AI space. Well, coming up later, U.S. Secretary of Commerce Howard Lutnick joins Surveillance Live from the implementation dialogue on EU-U.S. investment relations in Brussels. That is at 3:45 p.m. Dubai time, 11:45 a.m. for those watching in London. And a quick look at markets, because futures are pointing to open up in the green. As you can see, futures for S&P up 0.5%, the Nasdaq up 0.8, and European markets also up 0.8%, keeping a close eye on those discussions vis-a-vis a potential breakthrough on Ukraine and Russia. But that is it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.